But after these institutions get the regulatory green light to onboard into the space with whatever projects and digital assets they do choose to invest in, we are not going to see these prices ever again on some of these digital assets. So take advantage while you can, assess your own personal risk, and do your own research on what projects you believe are going to perform well in whatever market cycle we experience in the coming weeks, months, and years ahead. All right. Alrighty, so picking up where we left off from yesterday, considering the current risk-off backdrop has now continued, crypto has shed another over $100 billion today. Down on the day, roughly at time of recording, about $104 billion. I want to be mindful of how I'm going to break down today's fundamental report because there could be something that's taking place where the market kind of oversteps itself and overprices in the risk-off environment and gets a little bit too ahead of itself. So I want you guys to be mindful of that. That's kind of what I'm seeing on the backdrop right now, as I noticed that even though we're seeing some tensions arise between Iran and the United States, which we'll get into here in just 1 second, that created some of the sell pressure today, there hasn't been any confirmed escalations yet. And Iran and the United States are still set to meet and commingle on Friday, which we'll get into in today's report. So picking up where we left off, we're going to go over the fundamental backdrop, and then we'll take a look at the technical analysis, both on XRP, total cryptocurrency market cap, and Canton, of course. So in yesterday's update, I'd mentioned that risk sentiment still remains fragile as multiple uncertainties continue to weigh on market sentiment, including U.S.-Iran tensions, lingering negotiations involving Greenland and Denmark, yen intervention risks, and unresolved issues around Congress' tariff vote, the government shutdown, and government spending. At the same time, investors still remain cautious after Donald Trump backed Kevin Warsh, with the markets expecting tighter liquidity and less quantitative easing for now. So, as always, just trying to keep you guys in the loop with what's happening. We had discussed kind of all the things that have been taking place today. So, rolling over into today's fundamental report. All right, I'll make sure to drop this for you guys in the chat after we get off so you guys can read it yourselves. But today, the total cryptocurrency market cap continued its downward trend, shedding over $100 billion in value as new macro and geopolitical headwinds emerged, many of which we had already highlighted in previous breakdowns as key risks to monitor. The most significant headline centered on rising tensions between the United States and Iran. A U.S. official confirmed that American forces shot down an Iranian drone that approached a U.S. Navy aircraft carrier in the Arabian Sea. While no immediate retaliation or escalation has been confirmed, the situation has heightened investor anxiety. Attention will now shift to Iran's response and to any diplomatic developments scheduled for later this week. And you guys can see that in the official headlines today. It says right here, Iran's top diplomat Abbas Araghchi is expected to meet U.S. Special Representative Steve Witkoff and Jared Kushner in Istanbul on Friday. Iran has tentatively agreed to resume nuclear talks with the United States in an effort to avoid further military conflict. According to multiple sources, Iran's top diplomat, Abbas A., I'm not going to butcher his last name again, is expected to meet with U.S. special representatives in Istanbul on Friday. Iran's president has since confirmed the negotiations are being pursued, although under certain conditions, these talks would mark the first such engagement since last summer's U.S. strikes on Iranian nuclear sites during the Trump administration, which we all know created a heck of a lot of market uncertainty. Okay. While diplomacy offers some hope for de-escalation, uncertainty remains high, and markets continue to price in geopolitical risks. Remember last year in August when all of this took place and the market had a nice freaking sell-off? Just be mindful if these things continue to escalate and the market is right about the fear, uncertainty, and doubt that lingers between these two jurisdictions, and we continue to see escalated tensions further, it's definitely going to continue to weigh on the sentiment. All right. At the same time, monetary policy developments also added further pressure to risk sentiment. In our prior reports, we emphasized that hawkish Federal Reserve commentary would likely weigh on markets, and that scenario played out today. Federal Reserve official Thomas Barkin delivered remarks that signaled patience rather than urgency when it comes to further rate cuts. He emphasized that the U.S. economy still remains relatively resilient, with employment stable, consumer spending solid, and corporate profitability remaining strong. While inflation has cooled, it has not been fully defeated, and many businesses still retain pricing power. Importantly, Barkin described recent rate cuts as insurance. This was probably the most hawkish thing, rather than the beginning of a sustained easing cycle. In other words, they were precautionary measures, not a shift towards easy monetary policy. He also pointed to ongoing uncertainty stemming from geopolitics, trade tensions, and financial market volatility as reasons for caution. Taken together, his comments reinforced a higher for longer interest rate environment rather than signaling aggressive rate cuts in the near term, at least for now. This is the current macro reality. A Federal Reserve that remains cautious and slightly hawkish does not support excessive risk taking, and as a result, speculative assets like cryptocurrencies continue to face headwinds and remain suppressed. Now, with that in mind, today, this rising, as always, in the fundamental section, I try to enlighten you guys on what I'm seeing before the market opens. So at 7, roughly about 28 a.m., an hour before the session started today in New York, I mentioned to you guys that this was not a good look for risk assets, right? I said here, he didn't say anything that would send risk assets soaring. I highlighted all the key talking points from his speech for you guys that were hawkish. So hopefully you guys read those because that played out to the freaking T with sales today, which I saw a lot of you guys take. A lot of you guys had some really great trades today in the Golden Dawn section. So kudos to you for anybody that did capitalize on those moves, because today's sentiment was relatively risk off, right? With that in mind, just make sure that you guys are staying up to date with these fundamentals because they are of key importance to our long-term success in this space as day traders and as investors. For sentiment to meaningfully improve moving forward, markets would likely need a shift in Fed communication, specifically clear support for rate cuts or renewed quantitative easing backed by economic data that justifies such moves. If that combination were to emerge, investors could begin pricing and easing again, potentially shifting sentiment from risk off back towards risk on. Adding another layer of uncertainty to today's environment, we had critical U.S. economic data being delayed due to the ongoing government shutdown. With no clear timeline for the resolution, markets are prepping for continued disruptions in key economic releases. This lack of transparency makes it more difficult for investors to assess the true state of the economy and further undermines confidence. Meanwhile, there also have been no meaningful updates on other major geopolitical hotspots, like Russia, Ukraine, the Greenland debacle and situation, which has allowed tensions to remain elevated and uncertainty to persist. When combined geopolitical risks, cautious central bank policy, delayed data, and unresolved global conflicts, these factors have continued to drive sell pressure across risk assets today. As things stand, my stance remains unchanged. Until we see meaningful headlines that reduce uncertainty, whether through diplomatic breakthroughs, clearer Fed support for easing, or stabilizing economic data, risk assets are likely to remain under pressure. That said, it is important to remember that markets can also overreact. This is extremely important. This is what I was talking about. If investors begin to perceive that the current risk-off environment has been priced in too aggressively, so for example, we saw Iran and the United States headlines today, but if there's no escalated tensions, markets might start to see that they got a little bit too fearful and that there isn't going to be any escalated tensions between Iran and US. They meet on Friday. Maybe they dial back all the current uncertainty. They high five each other. They come to some nuclear agreement, and then the market's like, oh crap, we overreacted. Okay. We need to understand that we could see a relief rally and rebound in digital asset valuations just off of that announcement alone, or just off of that sentiment alone. Okay. For now, however, the broader environment still remains fragile. We remain on standby, still closely monitoring upcoming developments, any policy signals from any scattered Fed speakers moving forward throughout the remainder of the week, and any geopolitical updates for any signs of a shift in the current market direction. All right. If you guys want to read some of the highlights, I already capitalized on this on some of the comments that Fed Barkin made. You guys can go read thoroughly through those. And just so that way you guys have a firm understanding of kind of some of the things that I pay attention to when I'm reading these reports, you can see my highlights. All right. Yesterday, we had highlighted and talked about key areas of interest on Canton, XRP, and the total cryptocurrency market cap. First, taking a look at the total cryptocurrency market cap. We have respected the $2.62 trillion level to the absolute T. Buyers were not able to break and hold sustainably above the $2.62 trillion threshold, as we mentioned yesterday. that would likely lead to a deeper retracement. If sellers were able to trap buyers at these levels, buyers were not able to overpower, trap sellers, and turn this level into a support, we were likely to see another leg to the downside. That is now today happened. So the question now remains moving forward is, can we see buyers become aggressive enough to push price back above $2.62 trillion? And just like yesterday, when we had talked about the triple moving averages, can we see the $2.62 trillion threshold turn into a support? Triple moving average crossover underneath of price start to support price, and sentiment at the same time start to flip back bullish, supportive of risk on environments. We have yet to see that right now. So for now, I remain cautious, still looking at downside momentum to continue to take place in the total cryptocurrency market cap until the current tensions resolve themselves. Our previous levels have not changed. We're still looking at a possible drop down into 2.3 to $2.05 trillion if sentiment does remain skewed to the downside. However, we cannot ignore discounted prices at this current moment in time with what I'm about to show you guys here in just a second via institutional perspectives. Okay. So just be mindful of that. I don't want to beat a dead horse. Pretty much the same technical analysis as yesterday. Sustainable break and hold above $2.62 trillion opens the door for a meaningful recovery back into 2.89 trillion, where we'll likely reassess. Anything below 2.62 trillion at this moment in time opens the door for a deeper retracement back down into 2.3 to 2.05. Canton. Canton's price came straight down into that base that we had discussed and talked about yesterday. If you guys remember, I had highlighted here in this area, we had saw sellers try to make an attempt to defend at this dark pool. Buyers trapped those sellers, became aggressive enough to push through the dark pool up into the next dark pool at the 19214. Sellers defended. This is where Yuval had mentioned that there was a big seller in the market. Interestingly enough, that happened right at the 19214. They pushed price straight back down into the base at roughly around 17 cents flat. Since then, we have defended that level 3 times. And then today, we have now come back down into the 17-cent threshold yet again. Yesterday, I had mentioned that I'm still bullish on Canton and still expecting higher prices as long as 17 cents can hold. Even if we were to see some temporary sell pressure on Canton at the 19214 and have failed to break above it, as long as we do not break the 17-cent threshold, I'm going to continue to assume that the buyers that exist in this area are likely to continue to defend. I'm still going to hold weight to that current. There we go. I'm still going to hold weight to that current analysis. So with that being said, now that we have seen price come down straight into 17 cents, almost to the absolute pip, if I'm not mistaken, it was 17 cents to the freaking T. Almost, right? If we can hold above 17 cents, break bullish back above the 18,194, start to see buyers trap sellers, become aggressive enough to push price higher, turning the 18,194 back into support, that'll open the door for a possible revisitation of the 19,214, where we can reassess how buyers react if we see them come up into this area of interest. We need to see buyers become aggressive above 19,214, completely demolishing the sellers that have clearly defended this level, not once, but now 3 times, here, here, and here. If we can see that, coupled with buyers turning this level into a support, trapping sellers, and becoming aggressive, that will then open the door for a higher price push on Canton Coin up into higher levels. Next on our radar is going to be the 22,582 to the upside and the 26,110 if we do see any aggressive bullish undertaking on Canton's price. I'm honestly hoping, I'm favoring a more risk-off scenario. I wasn't at my computer able to buy at a discount this recent drop down into 17 cents where I would have. Honestly, personally, I'm going to be taking advantage of any discounted opportunities that I can get, not buying at a complete premium on Canton just to stack more. However, what I would personally like to see is that buyers get trapped at the 18,194. We do not see buyers aggressive enough to push price higher. Sellers then throw up a passive defense and become aggressive enough to break 17 cents. That would open the door for a deep retracement down into 14,801, where I will definitely be looking to dollar cost average into some more Canton positions. Anything below 14,801 opens the door for 12,257. I'll leave it there. I'm sure that we'll have another update before that comes into fruition. But if we break 14,801, we see sellers turn it into a resistance, trapping buyers at this level, becoming aggressive enough to push price down. 12,257 is next on our radar. And I mentioned to you guys on the daily time frame yesterday that we were likely to continue to see this triple moving average, i.e. the 50 EMA, start to make its way up into the 14,801. I wouldn't be surprised if in the coming days ahead it starts to link up with the 14,801 to the almost pip. That would be a really great healthy correction down into the 14,801 from this previous bullish move on Canton to see buyers reaccumulate and then continue to move higher if that did take place. So something I'm just paying attention to, not saying it's going to happen, but I will definitely be looking to buy more Canton at these lower levels if they are met. XRP's price. Levels have not changed. Honestly, price has been pretty stagnant, kind of just consolidating at the 160 psychological level. We haven't really substantially broken beneath it. We haven't really seen buyers become aggressive. So yesterday's analysis still stands. I don't want to beat a dead horse. We need to see buyers become aggressive above $1.60. Couple that with engulfing all of this previous bearish price action. If we can see that, that would likely result in a triple moving average crossover. Then the question is, can we see the triple moving averages act as a support? If we can see that, then that will open the door for a higher price recovery on XRP, back up into $2.31. Well, we will see how buyers react, how sellers defend, and if buyers can push price above that level. Nothing too spectacular. I don't want to beat a dead horse. Let's just go back to yesterday's analysis on XRP. To the downside, risk still remains. $1.39 all the way down to 74 cents is still on my radar as possible lower targets on XRP where I will start to accumulate if we can drop down into those levels. With all of that in mind, again, remember, guys and gals, greed works in both directions. There is a lot of fear, uncertainty, and doubt in today's current market environment. And when things get like this, a lot of people fixate so much of their attention on prices possibly going lower, just like in an upwards market or a bullish market, people focus so much of their attention on prices going higher instead of focusing on what opportunities exist in the moment. I encourage you guys to understand that across the board, this is a massive opportunity before financial institutions come into this space. Not financial advice, but I have a firm belief that over the next couple of years, maybe it's a year, maybe it's 2 years, but after these institutions get the regulatory green light to onboard into the space with whatever projects and digital assets they do choose to invest in, we are not going to see these prices ever again on some of these digital assets. So take advantage while you can, assess your own personal risk, and do your own research on what projects you believe are going to perform well in whatever market cycle we experience in the coming weeks, months, and years ahead.